So today we're going to start into chapter 6. The first thing I'd like to do, and this is about journalizing your payroll. All the work that we've done, we need to get it into our financial statements now, right? So all of you have taken, I hope, and passed, I super hope, Accounting 101. So I just want to do a really quick, yeah. See, I don't think you can teach Accounting 101 online.
I didn't know what. Oh, I actually learned, I would spend 6 hours a week on that class.
Oh, I bet.
That was the hardest class that I got the most out of.
Well, that's good to hear.
Yeah, so my biggest thing is right online.
Okay, quick debit credit update or review. We're not going to be using many different kinds of accounts here, but on a balance sheet, what 3 kinds of accounts do you see? Yeah. Assets, liabilities, and owner's equity or shareholder's equity if it's a corporation. What kind of balance do assets by nature have? Their debit balance. Right? So to increase an asset, you debit it. To decrease an asset, you credit it. Liabilities have what kind of balance? Credit. So to increase them, you credit them. To decrease them, you debit them. And then owner's equity has got those 4 kind of sub-accounts. Remember what they are, Kim? Yep. 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 And this is essentially your P&L, right? What kind of balance does capital have? And draw? And revenue? And expense? Okay. That's the hardest thing to teach students. It's just right here. Once you get that, it's like, oh, it's like speaking Spanish. Once you understand how to conjugate verbs, it's just a matter of learning the vocabulary. It's like, oh, I get it now, right? There's rules. Okay, so that's all good. So you need to know that, obviously. The only accounts we're using is cash, which is an asset. So to make it go up, you debit it, make it go down, you credit it. We're going to be using tons of different kinds of payables. Anything with the word payable is by nature a what? Liability. You owe it to somebody, and they all have credit balances. So when you incur a liability, you got to credit it, and when you pay it off, you got to debit it. And then we're going to be using all sorts of expenses. Wage expense, payroll tax expense, and those are all debits. We're not using, for this class, capital or drawing or revenue. Okay, so that's that. Easy peasy, right? And then lastly, on a journal entry, what are my 4 columns? Scott. Date? Yep. And debit and credit. That's it. So that's what we're going to be doing. Over and over and over. This is not creative. Right? It's just a set of rules that I'm going to show you, and you just got to do it every time and you'll get it right. Go to your ceramics class for your creativity, right? Okay. So here's the order that you have to get the data in your, to get data into your financial statements, here's the order you do it in. The payroll register is what you've been working on manually, that continuing payroll problem, right? That's a payroll register. When you do it manually, that's what it looks like. When you input it in the computer, you input everybody's data, how many hours they worked and what their wages are and da-da-da-da-da. And it's going to generate for you a digital payroll register. And if you're in a small company, you're going to review your own work. If you're in a big company, you're probably going to give it to somebody else to review. All right? And when you review something, you always start by just comparing it to last year, or last period, excuse me. Then, and in our payroll register that we're working on right now, the continuing payroll problem, we don't have this piece. But employee earnings records is then taking everything from the payroll register and posting it. And again, this is digital now, but just picture it in your head. In the old days, we actually rewrote it. So I would take everything from the payroll register and put it on a card with just Scott's name on it. So I can accumulate all his data. Why? Because at the end of the year, I've got to issue W-2s. I've got to know when to stop taking OASBI. And so in the old days, we had a big payroll register like you guys are doing for the manual project, and then you would have a box with all the employees' names in it. This is how old I am. And after you would do the payroll register, you would pull out Kim Hayes and transcribe all the material. Oh, Amanda Schramm. You're supposed to be like oohing and ahhing. Oh my God, that must have been tedious. It was tedious. And then you go to the general journal, and as you all remember from County 101, that's the entry point to getting data into your financial statements, right? So we've got to journalize these three things, and this is what we're going to learn in the next 45 minutes. Easy peasy. You've got to journalize the gross wages, right? Because that's going to be a flood on my books, an asset, a liability, an expense, a revenue, a what? Expense. Wage expense. That's going to be an expense, right? This guy. Gross wages is going to be an expense. It's going to run through my P&L. All of the withholdings are going to be what? Why am I withholding money from your paycheck? They're all liabilities. If I take union dues out of your paycheck, it's payable to the union. If I take a pension contribution out of your paycheck, it's payable to the pension administrator. If I take taxes out of your paycheck, it's payable to the IRS and the Department of Revenue, et cetera, right? So every single withholding is by nature a payable. The liability, which has what kind of balance again? Credit. So that's one journal entry. The second journal entry is I've got to journalize the cost to the employer of all of his or her payroll taxes. And what are the 4 payroll taxes an employer pays? OASBI, HI, FUTA, and SUTA. Okay? You guys all sit up here and smile and tell me that, and half the people get on the test and put fit and sit on that second journal entry. That's not an employer's tax. Those are withholdings. They go on the first one. The second tax, can we just recite this together again? Journalizing payroll taxes. The employer's liability, you're going to journalize OASBI, HI, SUTA, and FUTA. Okay? Period. I don't know what makes people die to put the fit and the sit back in there, but it doesn't belong there. That's a withholding. And then do you remember the last one? Do you remember what an accrual is? Why do we accrue stuff in accounting land? Huh?
It's not fair outstanding, right, or no?
No, an accrual is so that we comply with, do you remember the name of the concept in accounting? Matching? Yeah, I don't know what you're talking about. Okay, matching concept says you have to put expenses in the same period as the revenues that they help to earn. So for example, what are we on, the 12th of March? Say that I just cut you a paycheck for a month's wages, and the pay period just ended yesterday. Does all of your wages belong in the month of March? No. Because you earned half of them in February. And those need to be back in February where they match against the revenues from February. So that my financial statement have revenues and expenses that are from the same time period. Okay, so that's what we have to accrue for. And then once you journalize, you go to the general ledger and you pull the general ledger balances, and that's what you make your P&L and your balance sheet from. And that's the whole accounting cycle in a nutshell. Okay, I'm not going to spend a ton of time here because you're doing a payroll register. You know what it looks like. You know that you had to list all the employees and all those voluminous amounts of column headings, wages and all the withholdings and et cetera, net pay. That's what a payroll register is. When you put it, I think I've got it here. I can illustrate. Oh, actually, let me do it here so that I've got a couple people that are looking at this online. When I tell you to foot something, does anybody know what that means? You foot something? Brooke? Mm-hmm. On this example here, where we were just doing that food a chart, right? And I have 2 employees, let's say. Footing it is making sure that all these and all these tally to the same number. And again, this is really going to date me, but my first job out of high school, well, that's really true because I didn't finish high school, but anyways, that's one other story. So I was essentially a dropout, and I moved to Chicago, and I got a job at this company called Servomation, and they did vending machines all over the Midwest. And my task at my first job was you would get reports from all of the different what are they called, branches, and they're like the revenue reports or expense reports, and I added up in a manual calculator reports and footed and cross-footed them. Super fun.
Sounds like a blast.
Huh?
Sounds like a blast.
It was a blast, but it did launch my accounting career. I went back and got my GED and took an accounting class at the community college, and it's like, oh, I like accounting. And here I am. Oh my God. So we're all weird, right? Yeah. It was actually it was a great job. So that's footing and cross-footing. That's a manual proof. And again, in the old days when you didn't have anything to do that for you, you had to prove, you had to manually prove everything. Okay.
So, kind of off topic.
Yeah.
You mentioned earlier about how we could all know and stuff.
Right.
So, at the very beginning, it mentions that they hold it out for the first week's pay.
Yeah.
It's a month, or a half.
Okay.
But does that matter to our
No.
process?
No.
Okay.
This is the project you're working on, that CPP, continuing payroll program, is just really straightforward. There's no hidden innuendos. The only thing you have to be cognizant of is that when you go to calculate FIT and SIT and CIT, that you've got to take the simple out of there. Because we know that we don't pay income taxes on tax-deferred contributions to pension plans. That's the only even remotely little glitchy thing. Okay, so then just what I told you, you put this all into the employee's earnings records, and then here is your first journal entry. And we're going to practice this. I'm going to put up on the payroll register and have you practice. You first get out paper, set up a journal, those 4 columns I just gave you, and we're going to practice. And this is what it's going to look like. You're going to debit. Oh, and then the last thing is your debits have to equal your credits, right, when you journalize? And so you should run a table of that. Because if you hand me in a journal entry where your debits don't equal your credits, I'm going to take extra and take off all of them, you think it's worth. And just say, try again, please. I could say that, try again, please, or nice attempt, but I probably won't. I'll probably put a big asterisk because you can run a table and make sure your debits equal your credits.
I'm sure it's running.
Yes.
Really filter all the ones.
Right, that's my goal. And I always try and be soft, and I write in purple, not red. That's supposed to make people feel better. Just to help with retention, yes. I use a purple pen or a green pen instead of red. Okay, so if you've got a bunch of different departments, so like at the university, when we run payroll, they don't just debit wage expense. It's like Missoula College faculty wage expense, Missoula College administrative staff wage expense, School of Journalism faculty expense, School of Journalism administrative staff expense. You get what I'm saying. So there might be 50 different debits to expense accounts. Or if you're just a little tiny company, you just have a wage expense. Okay? And then each, as I said earlier, each withholding is credited to a liability. And this is where students really try and overthink it. Oh my God, what do I call it if they put money into their HSA? Like, you want $30 and they check out out and go into your HSA. What am I going to credit it to? HSA payable. Don't overthink it. It's just whatever I held out of your paycheck, I've got to pay to somebody else. So that's what I call it. And you don't like merge together HSA and pension withholdings because they're going to two different places. How are you ever going to reconcile it? Okay? So you're going to have FIT payable, SIP payable, ASDI payable, HI payable, union dues payable, pension payable, right? Depending upon what you have. And then the last credit, this is just an example of all sorts of different kinds of things that come out of your paycheck. We really haven't talked a bunch about this. I'll do that a little bit in this chapter, garnishments. Yep, so that's basically that. The only thing, and I don't really like this, I don't know why they do that, this in the book. If you're paying part of your health insurance, they put it to an account called health insurance premiums collected. Why? Let's just call it payable, health insurance premiums payable. So that I know that you know that it's a liability. If you call it payable, it's got to be a liability. Okay. Yeah. Go ahead.
I think they might separate it because I'm guessing it's in other math type ones, so it's one that they collected for it versus theirs that they're paying for.
Yeah, it is, but it's still a liability.
Well, yeah, but do you think they made a difference for that?
I mean, maybe. And we're not going to dive into this too deep, but this can get a little complicated because if you guys all work for me and I pay 80% of your premiums and you pay 20% of your premiums, my relationship with you and bringing in your 20% is separate from my relationship with the health insurance provider. Like I might pay them quarterly or semi-annually or monthly and then collect it from you. So do you remember what prepaid accounts were? What kind of account is a prepaid?
Insurance. Oh,
It's an asset.
Sorry, I thought you said what?
It's an asset. I own that. If I prepay the health insurance company, I own the right for them to cover you for the upcoming month or 2 months. So this can be kind of a pig to reconcile. You're not going to be responsible for that, but you do need to know two things. A, what are prepaids? They're assets. And B, health insurance premiums collected, which is what your book calls it, fine, is health insurance premiums payable. And it's just like any other withholding. Garnishments. This is when you go to the mailbox as an employer and somebody has brought a lien against you or against one of your employees, excuse me, not you, against one of your employees, and it's a court-ordered mandate that you garnish a piece of their wages and turn it over to the agency that you're getting the garnishment order from. It can be for child support. It can just be for, Providence Health Center, the hospital, a couple $1,000. It can be from Verizon. It can be from your sister-in-law that you lent money to, or you borrowed money from.
Well, they wouldn't.
And she had a note, well, no, if she had a note, a signed note, and you default, she can take it to the court and say, hey, garnish your wages.
I guess that's true. I was like, who the hell would do that?
That, which is why you never, rule 101 of life is do not get in financial transactions with family members and friends. I mean, it's just never works. Okay, with that said, there may be exceptions, but it's pretty rare. It's pretty rare that it works in my experience. There's exceptions. Okay, here's the order for attachments. Chapter 13 bankruptcy. So if you declare Chapter 13 bankruptcy, the judge is going to require you to pay back as much money as they think is feasible. Right? Like, I'm never going to pay back $100,000, but I can pay back 20 cents on the dollar. Okay? So that's the first order. Then, if you owe back taxes to the feds, or you owe child support, that's the second garnishment order. It's whichever is recorded first. They're considered equal, but if like, the other thing is, you guys, if you owe money from bankruptcy and child support and back taxes and student loans and creditors and da-da-da-da-da, believe me, if you're like on the second or third tier, you're never going to pay. You people, you can't get money out of the stone. Right? Okay, and then the second bullet says the garnishment is limited based upon the Consumer Credit Protection Act, which says you can only garnish so much of a person's wages.
How much can they garnish?
Well, we're going to see on the next slide, it depends upon what it is. So the maximum amount that can be garnished is the lesser of 25% of disposable earnings or 30 times the federal minimum wage, and then how much your disposable income exceeds that. I will tell you, in my experience with garnishments, working with employers, say you get a job, it's like, woohoo, I'm making 19 bucks an hour. And you go to pick up your first paycheck for 40 hours. You think it's going to be $690, right, after tax. And you go pick it up and it's $486. And I go to the payroll processor at my new job and I'm like, WTF's going on here? What happened to my $700 paycheck? Like, oh, we got a garnishment order. I'm like, I'm not coming back to work, right? It drives people underground. They just go underground. And a lot of times they never come up. And, huh? Yeah, okay, so that wasn't a great example. Yeah, I get my first check, whoop, whoop, $700, awesome. I go pick up my second check, $480, because I got a garnishment order. So that will oftentimes drive people underground. With that said, it's the tool by which, the primary tool by which that child support gets paid. I think we can all agree that you should pay no child support. Okay. Also be aware, this shows up a lot with my tax clients, and it always surprises them. It's funny that it surprises them, but I don't know why it surprises them. Okay, great, good news. I've got a refund of $1,900 coming, right? But I'm $10,000 delinquent on my student loans to the government. You're not getting your $1,900 back when you owe them $10,000. And, oh, hell yeah. And year after year after year, they'll get their $10,000 back, which I would do too. Yeah, absolutely, 110%. I lend you money, you don't pay me back, and then you want what I owe you? Yeah, I don't think so. You pay me back what you owe me first, and then I'll start paying you back. But again, that will a lot of times drive people, underground. Huh? They just don't file their taxes. Yeah. Systems only work when a majority of the people comply. Child support. This takes precedent almost every other deduction, and a lot of states now require, if I'm an employer and Warren's ex-wife, ex-partner, whatever, comes and garnishes his wages for child support, I don't have an ex-wife, and I always pay my child support. But if that was all true, I would have to, in many states, Montana included, not only withhold from his check, but then electronically submit it to the Office of Child Support Enforcement in Helena in the state capitol so that it can be easily dispersed to the partner and children quickly. And the whole goal is to get the money where it belongs quickly. But this one doesn't have to comply with the 25% rule. You can take up to 50 to 65% of a person's disposable earnings. Yeah, and that's where I really, you've got that balance between, come on, you need to get the money to your ex-wife or your ex-husband or whatever for the kids. But no one's going to go back to the job if they're losing 65% of it.
What if you're making like a minimum wage job? You know what I mean? Like, how are you supposed to live?
So it's just, it penalizes people. That's where the system breaks down in my mind.
How do they determine disposable earnings?
After tax.
Oh, so it isn't like taken into like rent?
No, just after tax earnings. After tax. Pay your bills.
What happens if that garnishment sets them to the point that they can't afford housing?
That's what I'm saying. I mean, it's silly. It's got to be reasonable. Everything's got to be reasonable. The other thing is, I'm a plastic surgeon in Miami making $1.2 million a year. Yeah, I can probably lose 50% of my disposable earnings and be just fine. I'm, average Joe in Missoula, Montana, making $13 an hour, and I've got, a kid and a cat and a trailer. Losing 50% of my disposable earnings, I am homeless.
I
So,
think that's why child support enforcement does like calculations to figure out how much you can afford.
right,
So
right.
it's kind of like,
Right.
And there's a way to get above that. When you start out with lower income, and you do calculation on that, you're calculating in 6 months in order to calculate. So that person quits their minimum job.
Yeah, I think it's so crazy to me that people would spend that much energy manipulating the system to get out of pain to take care of their own children. Right? I mean, that isn't right. We shouldn't, in a perfect world, we shouldn't have to do this. It just pays their child support. Okay. Federal tax levy, second priority after child support. You are going to have a piece of homework that deals with this last bullet, so let's talk about this for a second. They can take everything of your wages. They will only leave you your standard deduction and your exemptions, which are tax terms. The book's dated because we've had this massive Tax Cut and Jobs Act that was signed in a year ago, December. So we don't really have exemptions anymore. Those disappeared with the TCJA. So, but the book still uses those. So when you do the homework, follow through the example in the book that takes the standard deduction plus the number of exemptions and divides by the number of paychecks. That's all the money you get. And they will take the rest. And I will tell you, when you get in tax debt, they will come freeze your bank account. They will yellow tape and lockbox your business. I mean, they're not messing around.
Why would they do that to your business?
They're going to come in and take all your assets out of there. Oh, you've got a restaurant and I can come in and sell all of your equipment and get 15 grand.
So have you seen the show Schitt's Creek like that? When they come in and like, yeah, when they take all their assets. They rent their entire house. They take everything.
Who does?
It's in a show called Schitt's Creek. Their accountant didn't pay their taxes, so they took everything from their house. So they could do that.
That absolutely happens. So, but explain to me, and I know, everyone's like, oh, the government, blah, blah, blah. But it's like, I pay all my taxes, right? So why is it okay for you not to pay your taxes and not be penalized for it? Any more than it's okay, like, I use my credit card responsibly. Why would it be okay for Jenna to go to credit card and go and run up $90,000 of debt and then just go, oh goodness, I can't pay it, I'm going to declare bankruptcy. And then 24 months later, she can get credit cards again. I'm paying for that with my percentage rates on my credit cards. Or conversely, when we're talking about anything like this, my health insurance premiums are X. I get my 7 fruits and vegetables. I'm not a smoker. I exercise every day, blah, 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 blah. And, and you get where I'm going. And then lots of people need lots of medical care because they don't practice wellness. So all those things are sort of similar, and it's about that general sense of equity, I guess. In Australia, they call it fair income.
What do they call it?
Fair income. Fair income. And just that general sense of social equality, like that's not really fair to me. I'm no rule follower to that. Anyways, so yes, they do come in and take all your assets. Absolutely. I have had that happen to more than one client, and can I tell you, it's a pretty emotional thing. Okay, pension and retirement contributions. Again, we know, can you give me examples of a couple pension plans that we've talked about? An IRA, a 401k, a 457B, a Roth is a kind of IRA, and then I think you're talking about simples. Okay? Any of those can be either you pay into it as an employee or it's matched by the employer. Right? So you can be just the person paying it, or maybe if you're lucky, your employer matches a piece of it. Okay? We know all this. When's the last time somebody gave you a paycheck in cash? Okay.
Did those have something to do with documents, or you're just telling us that it depends?
No, I'm talking about different kinds of withholdings. A garnishment was a withholding, a pension contribution is a withholding. Yeah. Okay, so cash, check, EFT, how many people get paid electronically? Yeah, almost everybody now. The problem with EFTPS is if you have a workforce that doesn't, or EFT, if you have a workforce that is, doesn't have a relationship with a bank, you can't electronically transfer funds to it. So it's generally lower income workers. It's generally more transient workers, but some companies will pay with pay cards. So here's your paycheck on a piece of plastic. Okay, you can use it like a debit card. And it's more economical for employers. It's not so great for an employee. I mean, you really do not carry your paycheck around in your wallet, and I don't even know how I could manage my money that way.
You get off it?
Yeah, you can just go, like, I worked at
You can
Walmart.
cash it out, but you have to pay a fee.
Well, not like through Walmart, like they can pay on a card, and then if you take it to their cash services, you can just dump it, and they, since it's a Walmart paycheck, you can do it for free. So some places do.
Okay.
Like that, but
Okay. I would tell you my experience with these kinds of things is it's not a winner for the employee. And then we can all get electronic pay stubs now. That's allowed. Final paychecks, different states have different laws between how far between your final day of work and how long before you have to have your final paycheck given to you. Some states, they have to have it ready for you when they lay you off. Some states it's 24 hours. Some states it's just when you run payroll the next time.
What's Montana?
Montana, I knew somebody was going to ask me that. I don't know. I think you can just do it when you run your next paycheck here.
It's 3 days unless posted otherwise.
In Montana, 3 days.
3 days unless they post, but any business can post. Usually on the sign, but everything like the minimum wage laws and everything, your last paycheck is your main.
Next payroll.
Next regular payroll.
3 days if you don't have a sign posted.
So is that for, like, quit, or is that?
No, terminated.
Okay, what about-
Oh, no, same. Quit or terminated.
Okay, what if the company goes?
What if the company, one more time?
If they go out of business, and that could be.
Ooh, I don't know the answer to that. I would imagine, yeah, I would hope that I'm not in line with the other creditors trying to get final pay.
Where would you fall on the garnishments?
You would be towards the top. I can't tell you exactly where you would be, but employees and taxes are up at the top. Unclaimed wages, this is when you leave a company, this is, and I've seen this a number of times, you leave a company and, they owe you a day's wage, $89 or something, and your forwarding address or your address on your W-4 just gets a kickback. What does the employer have to do? The employer, right down here, there's a bullet, first you got to try and send a certified letter, I've got your check for $89, well good, already came back to me, I'm not going to get it. Then you have to turn the money over to the state of Montana. And the employee has got 1 year to come back to Montana, and it's called unclaimed assets, unclaimed wages, and come back and get their money. And if they don't, it will accrue back to you.
How does it prove that to you?
The state will say they didn't come, it's been a year, here's your $89.37 back.
So they'll send it back to you.
Yeah. And there's attorneys that do nothing but go through unclaimed wages and unclaimed assets of different states and try and make money by hooking people up with the assets they have claim to. I had a client like 3 years ago, it was just a house, it was just like a run-of-the-mill, a dental hygienist, single gal. And she got a call from an attorney in Oklahoma, and he'd gone through the unclaimed assets, that's what he did to get his cut. And he found her some, like a great-great-grandpa had some mineral royalties in Oklahoma, and she got a check for $90,000. And then he took like 30, because he found it. Because she had no idea she had a great-great-grandpa with mineral claims. Yeah. Yeah,
Oh, yeah.
yeah, unclaimed assets, yeah.
I had like a bunch of big stock that I never
Oh.
found in Indiana, like Walt Disney,
Oh, well,
like a bunch of shit. And I was like,
You buy lunch.
no, that was my grandpa gave that to me.
oh, yeah, that's cool.
Yeah, my-
Okay, we need to get through these journal entries. One set of journal entries so that you've got the tools to do the homework. So, 2 journal entries, you've got to make both of these every single time that you run a payroll. And it doesn't matter if you're cutting payroll for the university or for one guy that you fired after 3 hours. You still got the same 2 journal entries. First one, you're going to record the gross wages, the withholdings, and the net pay. We've already talked about that. Second one, you're going to record the payroll taxes to the employee.
How's that different than an This is one that was just formed.
Sorry,
So the 941, you record.
that's okay, you're not recording, that's just a report. This you're recording in a journal to get it into your financial statements, into your general ledger. So it's a part of your P&L and your balance sheet.
But the numbers should match.
The numbers should, well, I might be running payroll every week and a 941's for a quarter.
Fair enough, if you would do the numbers.
Absolutely, 100%. Okay, here's what it looks like. Over and over and over, this is the journal entry. You debit wage expense for the gross. You credit each of the payables for the withholdings. And you credit cash for salaries payable if you're not going to pay for like a week because it's got to go through the review process for the net pay. And if you can envision in your head your payroll registry you're working on, from left to right, you've got all the employees' names, then you have the gross wages, all the withholdings, and the net pay. And if you tally up those columns, those are the numbers you're pulling to do the journal entry. So do it. Here's your journal or your payroll register. And this over here on the side would be 2 employees, Alice and Bo. Alice made $1,000, Bo made $845. They both paid out some OASCI, some HI, some FIP, some SIP, and they have to pay, contribute to the health insurance. And the actual amount of the checks that were cut totaled $1,292.86. So set up your journal, date, description, debit, and credit, and based upon what I just told you, make the journal entry. You do all your debits first, and then you do all your credits.
I'm just thinking, when I walked out.
It's this. Let me just quickly, it's just this. You're setting up your journal, date, description, debit, credit, and you're doing exactly what we talked about. You debit gross wages, credit each of the withholdings. How many different kinds of withholdings do they have?
Two on there, but for this is important.
This is just for the first journal entry to record gross wages, withholdings, and net pay. How many different kinds of withholdings does the employee have? 5. OASPI, paycheck, fit, sick, and health insurance premiums. Debits first, and then indent and do all your credits, and your debits obviously have to equal your credits. Reading about that.
Did you go to them in one or different?
This is one entry,
One time.
one big entry. And to make this easy, I would just call this OASBI payable, HI payable, FIT payable, SIP payable, health insurance payable. That way it's consistent, right? And then I'm going to run this net pay is the amount that I wrote the checks for. Right? That's the amount coming out of my bank account. I have multiple bank accounts, I would say which bank account? Sterling bank account cash or whatever. So this is a really simple example. I've only got one wage expense and one cash account. And then I would run a tape and make sure that these equal 1845. If they don't, somebody screwed up the payroll register. Does that make sense? All you're doing, and there's never any change in this. The gross wage goes straight into the wage expense account. Expenses are debit type accounts. How do you make them go up? You debit them. Each of these, I'm going to pay somewhere. Where am I going to pay the OASBI? IRS. HI. It's going to go straight, these FICA FIT are going straight to the IRS. SIP payables going to the Department of Revenue. And whoever my insurance carrier is getting the premiums. Okay. Am I going to make that all in one big lump deposit? No, of course not. They go to different places at different times based on different rules. Second journal entry. This is for the employer's taxes, and that, one more time, is OASBI, HI, FUTA, and SUTA. Those are the employer's taxes. That's an expense for the employer. This comes straight out of his or her pocket. You debit the payroll tax expense account for the total of those 4 things I just said, OASBI, HI, FUTA, and SUTA. And then you credit each one of the taxes. OASBI payable, HI payable, FUTA payable, and SUTA payable. And I've got to tell you who's capped and what the rate is for SUTA. But you know the rates for the others. What's OASBI? 6.2. What's HI? 1.45. What's FUTA? 0.6. So the only one I have to tell you is SUTA. And I have to tell you what caps are. Go ahead and make this journal entry. This is the same payroll. But now I'm telling you, gosh, look at A and B are both capping for FUTA and SUTA wages. And I actually even calculate the tax for you here, but I wouldn't on an exam. You would run the 0.6% and the 1.45. So make this journal entry. You debit payroll tax expense for the total that the employer's going to have out of their pocket. And then you credit each of the individual payables. What's your total debit to payroll tax expense? $190.89. And it's just super straightforward. One debit, and then a credit. Some states might have, some other weird taxes, like California, you've got a disability insurance payable that the employers have to pay. The last question is, I need you to make a deposit for the 941 taxes. Can we all say together what 941 taxes are again? FICA, FIT. Just as a little spoiler alert, you're going to have 3 debits. Make the 941 deposit for this payroll. You're decreasing the liability because you're paying it, and you're writing a check, so it's coming out of your account, your cash account. How much was the total OASDI? Yeah, you've got to take it from the employee plus the employer. So 11439 times 2. Same with the HI. Where is the rest? You've got to pick up the OSDI from both places. You've got to pick up the HI from both places. For Thursday, read chapter 6, obviously. Do the discussion questions and the review questions. And then, can somebody tell me out of chapter 6 what I asked you to do for the problems? 1, 7, and 8. That's one, yeah, do all the homework for Thursday. It's just these two journal entries plus the deposit over and over. Okay, so we'll go over the homework on Thursday, and then I've got a couple of additional problems for your working class to kind of reboot. Yes, ma'am? The continuing payroll problem was due, I thought next Tuesday. I put it on the board. Did somebody copy it down?
I thought you put them for Thursday.
I think that's fine, Wednesday.
But if you want Tuesday, I'll do it, yeah.
Can somebody look and verify to me what I put on the board, please?
Yeah.
You said 14.
That's Thursday. Okay, let's do it then. Or do you want to go to next Tuesday so you have a chance to reinforce this before you have to finalize?
Yeah.
Okay, so everybody, attention. The continuing payroll problem then is due on the 19th. That's Tuesday. So you can push that up to next Tuesday, so we'll reinforce all this. So I know that you know what you're doing to finalize it and get it into me by Tuesday. Can you put down the software? But finally, something that I can show them.
I call it.